Hey there, welcome back to my channel, it's me the Mind Injector. In this video we're going to dive deep into SoFi Technologies. This fintech company has been on a rollercoaster ride since going public, and there's a lot to unpack. From their unique approach to digital banking to their recent financial performance, we'll cover it all. But here's the twist. SoFi's recent challenges could make it a compelling buy at these discounted prices. Stick around because I'll also reveal a key event that could significantly impact SoFi and why investors should keep a close eye on it. So, if you're ready to explore the world of digital banking and whether SoFi is a buy, let's get started. SoFi Technologies burst onto the public market scene in a rather unconventional way. They went public during the height of the pandemic bubble through a special purpose acquisition company or SPAC. It was a bold move, and it set the stage for their unique trajectory. After going public, they embarked on an acquisition spree, acquiring fintech software and even a consumer bank. Their goal was to expand their range of financial products to offer consumers a one-stop shop for their financial needs. SoFi initially began by refinancing student loans, but they've come a long way since then. While student loans are still part of their business, they now offer a plethora of other financial services. Think personal loans, mortgages, investing services, credit cards, and personal finance help, all within a single convenient mobile application. This diverse offering has allowed them to attract a wide range of customers. One of the pivotal moments in SoFi's journey was their acquisition of Golden Pacific Bancorp in early 2022. This strategic move granted them a consumer banking license. This means they can operate like a traditional bank, taking deposits and using them to make loans. The twist here, SoFi doesn't have physical branches, which means they have much lower overhead costs than traditional banks. This allows them to offer higher interest rates on deposits compared to their legacy counterparts. At the time of this video, they are paying an impressive 4.5% interest rate on deposits, compared to close to zero for mega banks. This competitive advantage has led to a remarkable increase in their customer base. They now boast 6.2 million members, which is around 6 times the number they had in the first quarter of 2020. SoFi's recent growth in customer base and deposits is indeed impressive. At the end of the last quarter, they had a whopping $12.7 billion in total deposits on their balance sheet, a significant jump from $7.34 billion at the end of 2022 and a stark contrast to the mere $1.15 billion at the end of the first quarter of 2022. Their revenue growth has also been nothing short of spectacular, up 171% since going public. But here's the twist, the conundrum of profitability. SoFi has been struggling to generate a profit over a 12-month period since going public. They reported a net loss of $196 million during the past 12 months. This has led to some bears raising concerns about the sustainability of SoFi's operations. They argue that the company is paying out high interest rates to depositors, taking on risky personal loans, and spending substantial amounts on marketing expenses. During the first half of 2023, the company spent a whopping $358 million on sales and marketing, accounting for 37% of its overall revenue. This has been a major sticking point for skeptics. However, the bulls counter this by pointing to the rapid growth of depositors and SoFi's revenue. They argue that these investments are well worth it. The argument leans towards the bulls, but it's essential for shareholders to be aware that the company is being incredibly aggressive in its efforts to attract customers and hasn't proven its ability to generate a bottom-line profit yet. Book value per share is a vital metric for a consumer bank. It's essentially a measure of the company's net asset value per share. And interestingly, even with skyrocketing deposit numbers, SoFi's book value per share has slightly decreased in recent quarters. If SoFi can keep adding deposits and increasing its revenue, its stock is likely to do well from these lower price levels. The business seems well positioned to turn a profit as long as marketing expenses decline as a percentage of revenue as it scales up. They've generated over $527 million in net interest income during the first 6 months of this year and could potentially start generating billions annually in a few years. However, there's a risk to be cautious of. The quality of the loans on SoFi's balance sheet. During the student loan repayment moratorium, they shifted significantly into personal finance loans, especially after obtaining their banking charter. In 2021, they originated $5.4 billion in personal loans, which swelled to $9.77 billion in 2022, and nearly $4 billion in each of the first 2 quarters of 2023. Given this rapid growth in personal loans, there's a concern that underwriting standards might be compromised. Now, here's the event you should be watching closely if you're interested in SoFi. It's the release of their third quarter earnings results, scheduled for October 30. This event will provide crucial insights into the sustainability of their operations amid their expansionary efforts. SoFi made a significant shift when it transformed from being a student loan financer to becoming a full-fledged bank. They've been able to capture a significant share of the market from traditional banks, boasting over $2 billion in deposits each quarter since acquiring their banking license. It's a trend they intend to continue. While SoFi has shown vitality this year, there have been recent declines in SoFi stock, with a nearly 14% drop in the past month, raising concerns among investors. The upcoming third quarter results could be a turning point and potentially restore investor confidence. To rejuvenate investor trust, SoFi recently made its Buy Now, Pay Later service available for small business clients through Galileo Financial Technologies. This move offers installment financing options to small businesses, adding flexibility and potentially boosting SoFi stock. In the realm of student loans, President Biden's latest move to forgive certain student loan debts has garnered attention. This program covers 53,000 public service loan forgiveness eligible borrowers who will receive forgiveness after 10 years of payments. An additional 51,000 borrowers on income-based repayment plans will get debt relief after a payment history recount spanning 20 years. The administration identified these borrowers as having qualified for student loan forgiveness but facing prior administrative errors. Additionally, 22,000 permanently disabled borrowers will also benefit. SoFi hasn't issued a public statement regarding Biden's plan, but their CEO Anthony Noto has expressed support for debt cancellation for struggling borrowers in the past. This aligns with their initial mission of making college more affordable. But it's important to note that SoFi also advocated for resuming payments for financially stable individuals during the student loan moratorium. So, why should you consider owning SoFi stock? Well, their recent performance is impressive. In second quarter, their revenue surged by 37% year-over-year, totaling $498 million. Their customer base also saw a 44% increase compared to second quarter 2022. Despite economic uncertainties, management raised their full-year guidance, anticipating over $2 billion in adjusted revenue at the midpoint. As government-backed student loan payments resume, there's a hope for a boost to SoFi's business, originally aimed at making college more affordable. While student loan refinancing faced challenges during the payment moratorium, it's expected to rebound, potentially increasing revenue. Moreover, amid concerns about the solvency of some banks in 2023, SoFi emerged as a safe haven. Deposits surged from $7.3 billion to $12.7 billion by June 30. This growth in deposits offers an advantage as they are generally low cost for the bank and can serve as a funding source to enhance SoFi's net interest margin in the future. As mentioned earlier, SoFi's upcoming third quarter earnings results on October 30 are pivotal. This event will provide insight into their sustainability amid their expansionary efforts. While they are currently experiencing a solid year, recent stock declines have raised concerns. The third quarter results could be the turning point and restore investor confidence. SoFi's digital-only approach has thrived in the digital age. However, the intense competition in the banking industry makes it challenging to stand out. Nevertheless, SoFi's customer base has surged from 1 million to 6.2 million. Despite the stock's lagging performance, partly due to bearish sentiment towards fintech in a high-rate environment, rising rates can benefit SoFi and boost profits. Net interest profits are on the rise. With the end of the student loan freeze, there could be a surge in demand for loan refinancing. SoFi's membership is continually growing, with 584,000 new members in second quarter, marking a 44% year-over-year increase. Before we get into the exciting details, let me introduce you to Moomoo Financial. If you open a brokerage account with Moomoo and deposit at least $1 using the link in the description, you'll get a chance to draw a free stock worth up to $2,000. But that's not all. If you make a net deposit of $100 or more, you'll receive not just one, but 5 free stocks worth up to $2,000 each. And if you're really serious about investing, you can deposit $1,000 or more and get a whopping 15 free stocks, bringing your potential earnings to a staggering $30,000. So sign up now using the link in the description and get those free stocks. Now let's get back to the video. Mizuho analyst Dan Dolev recently shared insights into SoFi's lending capacity. Despite recent stock declines, he's not concerned about the company's lending capacity. His analysis of SoFi's balance sheet indicates ample capacity to originate personal and student loans for several quarters even without selling loans. In fact, they have an even longer lending runway if they decide to sell a fraction of their loan originations. Furthermore, the company's management expects positive GAAP net income by the end of the year. Dolev estimates that for every $100 million of GAAP net income, SoFi can add $750 million to $800 million of incremental lending capacity. Now, let's dive into the competitive landscape. The banking industry is highly competitive, with numerous choices for consumers, from traditional giants like Bank of America, Wells Fargo and Capital One, to niche fintech companies like Robinhood and Block. There's no shortage of options. SoFi differentiates itself by operating purely online, without physical bank branches. This digital-only approach has allowed them to create a strong brand in the financial services sector, offering user-friendly products and an excellent customer experience. SoFi primarily targets a higher income demographic, which provides an advantage as wealthier individuals often require more advanced financial services. This demographic's complex financial situations can lead to better revenue potential over the long term. A crucial aspect of understanding SoFi's business is analyzing its loan book. Their major driver of loan originations has been personal loans, totaling $6.7 billion through the first 6 months of 2023. This segment has played a significant role in their lending activities. However, investors need to be vigilant about rising default rates, especially if economic conditions weakens. Home loans are a smaller part of their business. SoFi acquired Wyndham Capital Mortgage to strengthen their position in this market, but high mortgage rates have discouraged borrowers from taking out home loans. In a more favorable economic environment, this could have a more significant influence on their business results. Now, to summarize, despite the twists and turns, owning SoFi stock makes sense for several reasons. Their recent performance with a surge in revenue and customer base is impressive. As government-backed student loan payments resume, there's potential for increased revenue. They've emerged as a safe haven amid concerns about the solvency of some banks. Growing deposits, which are generally low cost, could enhance SoFi's net interest margin. The upcoming third quarter earnings results on October 30 are a crucial event to watch. Their digital-only approach has thrived, and their membership continues to grow. Furthermore, there's no need to worry about their lending capacity, as Mizuho analyst Dan Dolev believes they have ample room to originate loans, and the competitive landscape favors SoFi's digital-only model. Finally, analyzing their loan book, particularly the rise in personal loans, is vital for investors. This is it for this video, guys. Thanks for watching, and please make sure to subscribe, like and leave a comment down below.